Hello, everyone. I hope you can hear me well. First of all, let me introduce myself. My name is Nikoloz Mazanashvili. I'm an associate broker at Galt Taggart, which is the largest investment bank and brokerage in Georgia. I have been working with Galt Taggart for about 2 years, and during these years, I have worked with a lot of different investors. I worked with investors who just wanted to start with $500,000, and I worked with investors who would like to start with $500,000, $1 million. So I understand what beginner investors need to know. So first of all, I will talk about investments in general. I'll give you a quick information about what are stocks, what's the investment landscape in Georgia, and then I will talk about types of data that investors and also data scientists can use to have an edge in investing. I think it will be more interesting for you, so bear with me. So first of all, let's just start with the explanation what is happening in the world and where people are investing. So if we look here, some of the parts are in Georgian, sorry about that, just technical issues, but I'll try to explain everything. So first of all, just to understand where do people keep in money in like whole world. So about 32% of the European Union population is keeping money in capital markets, which are stocks, bonds, etc. So that's the first column, the goldish color that you can see. Now in USA, it's even more so. About 54% of population in US has their money invested in stocks and bonds. And in Estonia, it's one of the highest numbers. It's around 59%. Now, before the presentation, I actually looked up some interesting information about the most happy countries, the happiest countries, and countries which have the highest rates of financial literacy. And imagine my surprise when I found out that they're almost exactly the same. So it's in both of the categories. It's Finland, Sweden, Norway. So basically, as we can interpret that data as financial literacy and knowledge how to manage your money matters. And it can, everyone's saying money cannot buy happiness, but I mean, the data shows otherwise. So what's happening in Georgia? Let's now look at that. In Georgia, 95% of people keep their money on deposits. And in Georgia, we like to say that we do not actually have money. But as you can see, in by the August of 2022, Georgian population had about 22 billion liras on their deposits, which is quite high. I was surprised to hear that from my research department. The more interesting stuff is that in Georgia, the deposit rates on Georgian lari are quite high compared to other countries. So it's around 10%, 11% on average. However, if you keep in mind that we have quite high inflation as well, it means that people are not investing their money very well. Because, for example, maybe in 2016 and 17, it made sense to invest just to put money in the bank. But as we can see in 2021 and 22, inflation is higher than the deposit rates in the bank. So the lower side, the black line is the inflation and the orange line is the deposit rates in Georgian lari. So as you can see, if you just put your money in the bank during the last 2 years, you would be simply losing money, not making anything. The even more interesting information is that about 75% of people who have money in deposits, they usually have them on foreign currency deposits. And as you can see, these are the deposit rates in foreign currencies, and they're quite low. So about right now, the average deposit rate in foreign currencies is about 1.4%. If you try to open an account and make a deposit in foreign currency right now, the deposit rates are even lower, even under 1%. So what we can see from this information that I introduced is that in Georgia, we do not have financial literacy. Unfortunately, we do not know how to manage our funds, because if we knew, instead of putting 75% of our savings in just under 1%, we could just even simply invest in local bonds. Bonds are alternative to deposits. So basically, instead of giving money to the banks, you can lend them to companies, and you can get the same, it's the same structure. So you get a percentage rate from the companies. So even Georgian companies, local companies, are issuing bonds. They're usually issued in US dollars. So if you simply knew about these instruments, you could get 5, 6, even 8 times higher deposit rates than just putting your money simply in the bank account. Now, this is like a simple introduction to what's happening in Georgia and why we need to learn more about this stuff. So that's why in Galt Taggart, we have been trying to arrange these kind of meetings just to educate people more about the possibilities. Now, bonds are simple instruments. You just buy them, hold them, you receive the coupon rate. So coupon is like a percentage on the deposit. And that's basically it. It has maturity, so it can be 2 years, 4 years, 10 years. These are local companies, but there are actually thousands and hundreds of thousands of bonds of different companies. So even US government bonds that are called treasuries right now are paying more than 4%. Which means that it's risk-free, basically, because if you believe the US government will be there in 2-4 years, it means that it's risk-free. It's and once again, it's paying 4-5%, which means that you could simply, by investing in risk-free assets, which are less riskier than investing in Georgian deposits, you could get 4 or 5 times more. But bonds are just like basic instruments, and there are more interesting instruments. Historically, one of the most interesting instruments, I think it's frozen. Guys, it's not moving. Technical issues, sorry. All right. Sorry about that. Now, historically, one of the best instruments that can give you great returns have been stocks. So what are stocks? Stocks are like small shares of the company. So let's say if Apple has million stocks, if you buy 1 stock of Apple, you own 1 million of the Apple. Now, there are different type of stocks. I will not talk a lot about that, but just for your understanding. So companies differ. There are different types of companies, so their stocks are different as well. So usually these are the main categories of stocks. Let's say first is blue chip stocks, which are more mature companies that are leaders in their industries. We also have dividend stocks. These are very similar to blue chip stocks. So basically, these are companies that are mature. They do not have high growth prospects, so they would not be growing 20, 40, 50%, let's say, like Tesla or other startup companies. But instead of growth and your stock price growing up, they're paying you dividends, which is like part of their profits that they are sharing with you, which can be quite a good income for an investor. We also have growth stocks. These are more startup companies that do not give out dividends, so they do not share their profits with the investors, but they have potential of high growth. So let's take Tesla or even Microsoft. Microsoft is paying dividend, but they're still growing like crazy. During the pandemic, the company which was which had a valuation of around $2 trillion, it was growing 40% year over year. So when you're investing in growth stocks, you're hoping that the company can grow faster and that your stock price rises and you can sell it in a profit. Now, also we have defensive and cyclical companies. Defensive means that this is an industry that doesn't depend on the state of economy. So basically it's healthcare, food, it's products that we use every day, because even if the economy goes down, like right now it's happening in the whole world, these products will be still demanded, so defensive companies do not fall that fast. So let's say Meta, which is Facebook, this year fell more than 50%, which is also a risk. Investing always carries risk. But if you try to diversify your portfolio and invest in defensive stocks, you have less risk. The cyclical stocks are the other part of this investing. So basically, cyclical stocks depend on the state of the economy. Then they can rise very quickly when the economy is doing good, but they can also fall very quickly when economy isn't that good. And penny stocks are stocks that cost very like small amounts of money, let's say $1, $2. They're the riskiest of this all. Now let's go to the more interesting part. So this was the introduction. So there are different ways how you can invest. The simplest way how you can invest is passive investing. Passive investing means investing in index funds. So not choosing different companies, because to be honest, it's quite hard to choose good companies when you're investing, but you can simply use the passive method, which means that you choose an index, for example, the S&P 500 index, which includes 500 biggest and profitable companies in US. So those are Google, Apple, Microsoft, Exxon, and all the big companies that you've heard about. And you can invest in this index even with $100. So you know that you do not need hundreds of thousands of dollars. You can buy one share of the index. There are index funds, and it's used like a pension fund by a lot of investors, and I'll explain to you why. So basically, you could look at this as investing into your pension. I've calculated, like, on average, during the last 100 years, S&P 500 has been growing at around 10.4%. During the last 10 years, it has been even higher. It's 13.6 years. So it has the largest and the longest history of all the instruments on the stock market, one of the longest histories, even longer than our currency. So if you decide to start investing for your future, it doesn't need to be pension. It can be like investing for house or investing for other long-term goals. You can just simply choose this one instrument. Warren Buffett, legendary investor, says that investing in S&P 500 is the best decision for 90% of the investors. And the longer you invest, the better profits you get. So for example, if you start investing just $250 every month, in 30 years, you would have around 600K, which is quite amazing. If you start investing $1,000, you can see that in 5 years you would have only $78,000, but by the year 30 you would have more than $2.4 million. So compounding and investing horizon is very important. If you would like to start investing long term, you have to make it constant. You have to invest every month, and the longer you hold, the compounding interest can make miracles happen, because once again, in 5-10 years it might not be that much, but after 15, 20, 30 years, once again, it can return to you a very good profits. And we also calculated like how much you need to invest and for how long to become a millionaire. It's calculated in Georgian lari. So if you start investing right now, approximately you would need about 25 years if you invest $250 every month to become a millionaire in Georgian lari once again. But if you invest $1,000 every month, you would just need not even 14 years. So once again, this is the easiest way that everyone can do. You don't need to be in front of Bloomberg all day long. You don't need to watch charts. This is a tested way. And all you need to do is simply put aside 5 minutes every month just to put your like small amounts every month into the index funds. And before I go ahead about more active way of investing, which I think might be more interesting for you, I will also tell you that there are different types of indexes. So for example, S&P 500, which I talked about, is the most diversified index. It invests in 500 companies in all of the sectors, so it is less risky. But if you like technology sector, for example, you can choose other index funds, let's say NASDAQ, which you can also buy just with $100, and you can invest with $100 in 100 different technological companies that are being traded on the US stock exchange. And there are different exchange traded funds as well. So for example, if you like artificial intelligence, which was one of my first investment, you can actually buy a fund that has 50, 60 different companies like NVIDIA, Microsoft, Google, and even smaller companies that are working into the field of artificial intelligence. If you like electric cars, there are ETFs like that. So yeah, financial world actually gives you huge opportunities. And if you like some industry, if you like some company, right now, you can very simply invest in these companies. And once again, this can be very good investment in the long term. In short term, yes, there are risks. As I talked in the previous slide, here you can see that there are periods when stocks fall. But once again, during the last 100 years, usually these periods when stocks fall continue much less than the growth. And if you stay around, if you do not panic, and if you continue investing in the long term, it's almost 100% guaranteed that you will be in the profit. Now, this has been like mostly introduction. Now we can go to the more interesting part. So since most of the people here are data scientists and more technical people, I'm sure you would like to know how you can use your skills to invest smartly to beat the market, which is not that easy, to be honest with you. About 90% of even the largest hedge funds cannot beat the market during long term, but there are exceptions. And there are many different types of data that actually everyone, but more specifically data scientists and data analysts, can use to invest more smartly in the specific stocks. So the most traditional way of analyzing stocks, it's fundamental and technical analysis. I won't talk a lot about that because this is a huge topic that will take average person few months to understand everything. But once again, so the basic information that you need to know about the stock is just to analyze their financial performance, analyze the industry where the company is working, analyze the economy, so how it's doing. Right now, the US economy is not doing very well, so even good companies such as Google, Apple, Amazon, even though they're making profits, they're growing, their stocks are still falling. So economy is very important as well, and you should be able to predict what the future cash flows for the company will be. And there is also a technical analysis, which is a more simple way of analyzing stocks. It's just looking on the charts and understanding the momentum. So is the stock going up? Is the stock going down? Is there momentum in the stock? There are different ways how people are doing this using even algorithms, because every time a company posts its financial results, its earnings, the stocks are moving very quickly. It takes seconds, which tells me that even the biggest hedge funds have programs and algorithms analyzing their earnings and making investment decisions. And actually 75% of trading on the financial markets is done by algorithms. But let's go to more interesting details that even an single person can use. So for example, the first thing that I would like to talk about is that the financial markets, especially US markets, are very transparent. They need to post all the information. So first of all, companies need to post all the information, their financial results, their expectations, but that's not only it. Even single persons of the company's insiders need to post information about their activities. So if you're a big shareholder of Apple, let's say if you're a CEO or CFO, and you decide to sell or buy Apple stock, you need to inform everyone about that. And this information is freely available to anyone. It's posted on a lot of different websites. So mainly it's regulators' website, it's SEC in US, and you can find information about that on the official regulators' website. But there are actually a lot of simpler websites that give this information in more understanding way. So one of the websites is Finwiz, which I like very much. So you can go to this website and see every day which insiders of the company, so once again, management, largest shareholders are buying or selling stock of their companies. And it can be very informative because one of the legendary investors, Peter Lynch, once said that investors, insiders can be selling their stocks for a lot of different reasons. But they buy the stocks only for one reason. They think that the stock will go up. And you would think that insiders actually know more about the company and its growth prospects than us because they're working in the company. They have more information than us. So just monitoring their information can give us an edge. Just for example, in my case, one of the most successful trades that I made was on Ford, and one of the decisions why I bought shares of Ford at that moment was because the founder's grandson, so Ford's grandson, actually bought $400 million worth of shares that day. So I thought something is up and something is happening. It was a risk, of course, but it worked out very well. And it's not only about the insiders. So even the politicians in US, if they decide to buy or sell stocks, they have to report it. And this information is freely available on the internet. So once again, one interesting information that I would like to also share with you is regarding the Nancy Pelosi, which is quite famous in the investing world. She's a politician, but I think she's better. She's making more money right now than even the biggest hedge funds in terms of gains. I mean, more gains. For example, one of the most interesting trades that she made was regarding NVIDIA. One day, she just simply decided to sell most of her shares of NVIDIA, and this information was available on the website, of course, because she had to report it. And in about 2 days, United States announced that they are restricting NVIDIA's ability to export chips to China. So once again, insiders usually tend to have more information than us, and just simply monitoring their trades, which once again is available freely on the internet, can give us edge. And there was actually a research made on this topic. It was in 2000s. It was made by the representatives of Harvard and Stanford University, and they found out that the investor buys actually beat the market on average 11%, which is once again an amazing result. And just monitoring, once again, this information can give us an edge. And this information is available even through APIs. So data scientists can create a lot of different tools using this information. And there are different websites that actually monitor this information. One of the websites is Finwiz. So once again, I think you could use that as well in your advantage. Now, the second type of freely available data that investors can use is information about the portfolios of hedge funds. So hedge funds, these are the big financial institutions who manage billions and even trillions of dollars of money. They're supposed to be the best in choosing stocks, but in US there is a very interesting requirement for them that every quarter they have to share information about what they're buying what they're selling. So basically all the information, all the transactions. And as I said, usually the market is showing around 10% gains on annual, but here are some of the best hedge funds during the last 5 years. So for example, Sky Global showed an annual return of 50% during the last 5 years, North Peak around 35%, and you can see other different hedge funds as well. So they are showing exceptional results. Investing in hedge fund is very hard, so you need at least $1 million to become the client of hedge fund. But the interesting thing is that you do not actually need to have that amount of money. This information is freely available on the internet. You can simply go to websites such as SEC, once again, which is the Securities Exchange Commission of US, and you can find this information. And I will also show you different websites that have this information freely available. And just to give you an example how strong and efficient hedge funds can be, there is one hedge fund called Medallion Fund that started in 1988. It was started by a US mathematician, and they had only 1 year when they lost the funds. It was in 1988, so their first year. After that, their annual returns have been around 66% on average. Which is a lot. Just to give you an example how much that is, if you have invested $100 in 1988 with the Medallion Fund, in 2008, after 30 years, that $100 with the average annual growth of 66% would have been grown to more than $400 million, which is an amazing result with just $100. And this information is freely available on the internet as well. Of course, it's with a small lag. They do not share this information every day. They share it every 3 months. But once again, I just went to their website and I found what stocks they bought this fund in the last quarter. And for example, it's Microsoft, Nike, Goldman Sachs, Citi, etc. So once again, you don't need to be a millionaire to start investing like the best hedge funds. You can simply monitor their transactions on the internet. And there are hundreds of different hedge funds that invest in different assets. So for example, if you're interested in technology stocks more, you can simply buy hedge funds that are investing in the tech industry, and you can simply follow them. And there are two, so the main website where this information is available is once again, SEC, which is a US regulator's website, and they can give programmers quite good access to their API just to simply download this information and analyze it in the way they like. But there are also very simple websites such as Dataroma or Whale Wisdom that already do this, and you can just simply go to this website and let's say choose Warren Buffett, and you will see exactly what he has in his portfolio and what he has been buying and what he has been selling, which can be quite powerful. One more information that is also freely available and very helpful is the analyst expectations and their price targets. So all of the big banks in US like Citibank, Morgan Stanley, JP Morgan, they usually have analysts who are day and night analyzing different companies, and they're sharing their expectation about that companies. And this information is also available on the internet freely. So for example, this is a TipRanks website, and here you can see, for example, for the Apple stock, which is the upper right corner, that Apple is covered by 24 different analysts, and on average, their expectation is that Apple will grow around 30% during the next 1 year. And you can find this information on all of the stocks, and you can even see the statistics of the single analyst. For example, you can see the analyst ranking, what their success rate is, what they cover, and you can use this information in your advantage as well. And you can even use different kind of informations together. So for example, our research department about a week ago, they took out the information about the most bought stocks by hedge funds, which was around 100 companies. Then they used analyst recommendations. They chose from these 100 stocks about 10 stocks that had the highest expectation from analysts, and we got quite an interesting list. Unfortunately, right now I'm not able to share it with you because it's still not publicly available, but we should be posting it on our website very soon. And one of the most interesting and crazy stuff that has happened during the last 2 years is the investor sentiment analysis. Of course, it has been around for a lot for years, and there are different indexes that measure what's happening on the market. For example, are the investors scared? Are they greedy? But recently, it was because of the GameStop. I have to tell you this history for you to understand everything. So on Reddit about 2 years ago, a guy found out that one of the stocks, GameStop, was very shorted, which means that a lot of different hedge funds were trying to get the price down. He started posting on the Reddit about this phenomenon, and he made a lot of people invest in GameStop, which because of which, of course, the price started going up. But since the hedge funds had the shares shorted, since they didn't want to have big losses, they had to close positions. So they had to buy stocks back. And this added another layer of pressure to the stock going up, because of which the stock went up even more. And this continued for days, and GameStop, which I think is one of the dying companies right now, went up more than 1,000% in about 1 month. And after that, hedge funds and financial institutions understood that regular retail investors have great power right now. And there are already websites and hedge funds who are monitoring social media, Reddit, Twitter, Google searches. They're they're trying to understand what are people talking about. Is this a positive sentiment or negative sentiment? And there is one website which is, I think it's not very professional, but still shows the power of data during investing, because there are a lot of cases when simply because retail investors started talking about some specific stock on the Reddit, because of that stock went up, because more people saw it, more people started investing in that, and that can be used as well. So this is a very nice tool as well. And just a quick tip, if you're interested in starting investing, of course, you need a broker. And in Galt Taggart, we do have different types of brokerage accounts for all types of investors. So if you're interested, just talk to me. I'd be happy to help. So that's basically it about my presentation. So if you have questions right now.
Thanks for the talk, for the presentation. Very insightful. In fact, I had a couple of questions prepared. You already answered them. So this is cool. However, I want to touch a very important trend happening right now. Obviously, you spoke about, different machine learning algorithms, different startups or like websites which are trying to predict how the market in general, or this or that stock in particular, will behave in short term or in midterm or in long term. But we always will have someone like Elon Musk, or someone who is relatively in the center of attention, let's put it this way, a celebrity, or an executive who can tweet something, who can post something, who can give away an official, interview, and then that can crash their own stock or your competitor's stock or something like that. How are these algorithms protecting us from that?
Protecting us?
Protecting us.
Let
me paraphrase. How can we secure ourselves to be less vulnerable to Elon Musk tweeting something about this or that stock, or his own stock, Tesla?
Okay, I can talk a lot about that. So first of all, just to clarify, in the short term, the market is very volatile, and yes, even one tweet of Elon Musk can send the stock down or maybe even up. Not only stocks, crypto as well. But just to understand, in the short term, the market is guided by emotions. So the market is like, I've read one book that I really like. It's called The Magic Formula of Investing. So in short term, the market is like a drunk man. So it can step one step left, one step right, but in the long term, it goes just one way. So basically, in the short term, of course, stocks can be very volatile, and some people may panic and sell. But if you're confident in your holdings, in your company, if you believe that the company will still grow and will be there after 1-2 years, you just can be simply a long-term investor and do not look at the tweets and what stock is doing every day, because long-term investing, you can imagine it like that. So basically, imagine you buy a house. And imagine your goal is to sell that house in 10-15 years when the prices go up. You wouldn't be going to the website checking house prices every day, right? So you have to look at investing in long term like that as well. But of course, if you would like to take advantage of the algorithms in the short term, there are a lot of different natural language processing algorithms that can identify. Of course, I'm not expert in this field, but once again, I read a lot about that. I have connection with this field, and there are a lot of different NLP algorithms that can identify if the stock is positive, if the tweet is positive, if it's negative, and make decisions regarding that. There are even algorithms that are freely available, let's say on tpranks.com, the website that I showed, what financial news agencies are writing, what bloggers are writing, and if it's bullish, so positive, or if it's negative. So you can use that as well. Let's say if the sentiment is very negative right at that moment, if you're quick enough, if you use the correct algorithms, you can make correct decisions to sell the stock at some point and buy it at a better price. But it's not that easy.
Thank you. You spoke about financial literacy, especially in Georgia. I assume a similar situation is, in this part of the world, in the post-Soviet countries. Obviously, in the US, I think the financial literacy is on a higher level. They are like, the stock market is more developed. Let's say more people proportionally are investing, right? However, the question is, how can we use data? And you had a couple of very, I would say, like eye-opening charts. How we can use data or potentially other tools and mechanisms to increase the financial literacy, specifically when it comes to diversifying the portfolio. And as you mentioned, not keeping all your money only on your deposit account, because there are ways to make much more money.
Yeah. So first of all, in Galt Taggart, we ourselves are trying to increase the financial literacy. So we have meetings with students. We have online courses. We wrote ebooks, but I think it's not enough what we're doing, because there are more efficient ways how you can increase literacy in a country. So, for example, first of all, it would be educational applications which make learning game-like. So I think that would work very well with younger audience as well. One very interesting trend in the world also is that right now the machine learning advisors are very popular. So a lot of big banks in the US, they have applications that you simply open, you enter your information, your age, your investment horizon, your risk appetite, what industries you like, and the application can generate a portfolio for you, and you can adjust it, but it makes it much easier because, for example, even for myself, creating a good portfolio is very hard because it needs a lot of knowledge. I imagine how hard it can be for the beginners, but when you have an app that can simply easily recommend you something and tell you this is a good investment during, let's say, inflation, or if you want defensive stocks, or if you're investing in 20 years, if it can assist you, I think that would be very helpful for people as well, because one of the most popular questions that I always get is, what do I buy?
All right. And again, you mentioned like a bunch of different tools and platforms that you personally are aware of, and I believe many others in the industry are following, maybe not even necessarily financial analysts or the brokers, but like regular people, who want to diversify their portfolio and to invest are probably following those tools. However, how happy are you with those tools? How satisfied are you with those tools? Is there any tool that you wish there was, which would help you, have better predictive analytics, or are you building your own software to do that? If it's not confidential, of course.
Yeah. Of course, there are a lot of different resources on the internet that I use. For example, financial analyst predictions is very helpful because those are the people that should know their industries the best. But of course, as I shared the example of the Renaissance Capital Medallion Fund, algorithm investing and using AI during investing can be very powerful. So as I shared, the Medallion Fund, which is built by the mathematicians, one of the best of their time, they returned 66% on annual, which is mind-blowing. Once again, just if you invested $100 in 88, that would be more than $400 million right now, which is, you can't even imagine how you can get that. But yeah, if we had tools like that, of course, not that sophisticated, but tools that would analyze automatically the trends, the movements, and would suggest in a better way when to buy, when to sell, that would be amazing. Of course, after some time, that would make market more efficient. So you would get regular returns, but maybe in the beginning, that would work very well.
With the high returns. So yeah, I mean, if there are any developers, data scientists, AI people in this crowd, just follow what Nikoloz just said and try to build that tool. I think the market needs that. Yeah. Right.
I think the most needed tool that we need in Georgia right now is simple robo-advisor. Just simple. You go into it, you don't know where you want to invest. You just have, let's say, $1,000. And you don't know what to do with it, and you don't want to read about it for hours and hours, and you just want someone to help you. Unfortunately, we try to help our customers, we try to educate them, send their information, but directly as a broker, we cannot give them financial advice. I cannot tell my customers go buy Tesla right now. But if there was an app that would simply tell, let's say, if you want to invest for 5 years, if you have $500, go buy this ETF or this stock, that would work amazing here.
And while that app or website is not ready yet in Georgia, and of course, I'm not going to ask you the question what to buy, what to invest in, but I will try to get a response from you from a different perspective. Obviously, you are following what's happening on the market with the existing companies, but you are probably also taking a look at IPOs, right? When startup or another company, another industry, private sector becomes public, they issue stock, they list it on one of the stock exchanges. What is hot there? Is there any interesting startup that you are waiting to go public?
That's a good question. One of the most anticipated IPOs that I was waiting for happened about 2-3 weeks ago. It was Mobileye, if you heard about that. So it's Intel's subsidiary, a daughter company, which is working in the autonomous vehicle driving sector. So they already have customers such as BMW, such as Mercedes, Audi, and they create tools and cameras for the future generation of cars for the autonomous driving. And I think it's it has huge potential, because I think myself we're going to the future where we will not be driving cars ourselves anymore. But yeah, there are a lot of different companies who are planning to go public in the near future. So for example, Instacart is one of the few companies that I'm looking for. Reddit, Discord, if I'm not mistaken. I don't remember all of them, but I have a list, and it's very simple to search it. Just type hot expected IPOs and that's it.
It's interesting that pretty much each of the companies that you mentioned is in the tech space,
Yes.
the tech
Yeah.
startups. And that's where I'm wearing my hat as a co-founder of a Georgian Business Angel Network. We are basically investing in early stage startups, technology startups. And then obviously we are waiting for the valuation to go only up and up and up, and then it actually go public. So we make very high returns, but we are taking the biggest risk because we are investing at the early stage of the company where the statistically, like the probability of them failing is the highest. Because statistically speaking, I don't know, Apple or Google or Facebook or any of the blue chip companies going bankrupt is significantly less. I mean, possible. There is a probability, and that happened with Enron and other public
of
companies.
course.
But Enron was public, right? It was not a private company.
It was public company.
Yeah. So I mean, it might happen, but it's a very low probability versus startup. Like 95% of them will be poof, within the next 9 months or 1 year. So what I'm saying is exciting. You mentioned all of them are tech startups. So one of them was computer vision, right? Again, artificial intelligence, Instacart, predictive analytics. Any other industry? I know we are DataFest. Let's forget about data and AI startups. Any other industry that you think hot IPO is coming up?
I wouldn't say
electric cars, maybe.
Yeah, I wouldn't say IPOs, but I think one of the hottest industries for the next few years would be energy. In the whole world, in Europe, in US, because of the war that Russia started on Ukraine, right now all of the countries have energy crisis, and it's dreadful. It's very bad in Europe right now, what's happening with energy prices. And I think the whole world right now understands the importance that energy independence and sustainable growth in energy, how important it is for countries. And I think there will be a lot of new companies and innovations happening in that industry in the next few years, because we simply need it. We will not survive without that. So I think monitoring energy companies, renewable energy sources, LNG, even nuclear energy is right now very hot, and people are talking about creating smaller, more efficient nuclear plants that can generate much more energy than other sources. So I would look into energy and startups that are working there, or even old companies like Chevron, Exxon. Since the start of the year, the whole market has been going down, tax has been going down. But if you look at the energy companies, just again, Chevron, Exxon, BP, Occidental Petroleum, they returned more than 100% during the last few months. So I think energy shouldn't be forgotten, and it's very important.
Thank you. And I think one of the exciting things that's happening right now is, again, most of these traditional, fossil fuel-based energy companies that are there are transitioning into green, transitioning into alternative energy sources, because otherwise they would just go bankrupt, right? I mean, the oil will stop using oil, I think, within the next 50 years, probably, right? And then what's the future of these publicly listed companies? What's the future of their stock? I mean, everyone knows that we will run out of oil or gas eventually, right? So I think it's smart that they are diversifying. But in this context, I want to go back to the electric cars versus traditional car producers, like Tesla stock. Everyone says, even Elon says, now it is overpriced, which is quite a surprising thing to say for the CEO of his own company. But again, what we see that most of the car producers, even the supercar producers, race car producers, are also shifting to electric cars. on one hand, because that's what the customer wants. On the other hand, there are very tight regulations coming up in the European Union, in California, in other US states and countries where they simply are forbidding the production or the sale of an internal combustion engine like traditional fuel-based cars. So in this context, Tesla stock performance versus Ford or any other like traditional car producer who already has electric cars in their portfolio. Your quick take on that.
Sure. So Tesla alone, their valuation is bigger than I think the 10 next biggest companies together, which is crazy. But Tesla is not being valued as a car company. They're valued as a software company and actually as a data company. We can talk about that. All of the cars that Tesla has, that every time you ride the Tesla cars are recording all of the data and they're sending it back to the headquarters at Tesla, and it's being analyzed for the future of autonomous vehicles. I think the autonomous driving is the future and it will change a lot. So first of all, Uber, Lyft are definitely waiting for that to fire all of their drivers and just to let the cars ride. It will change a lot in our lives. Deliveries, taxi drivers, I think even the traffic problems will be solved by autonomous driving in the future because cars can communicate with each other. And right now, people are looking at Tesla as a company that will be the leader in that industry, that will change everything, that will have the most data, and that will rule the world in 10 years. So stock market is very future-looking vehicle, and that's why Tesla is valued that much, because they think Tesla will be the king in 10 years, in 15 years. But of course, other companies are trying to catch up. A lot of people are thinking that other companies such as BMW, Mercedes, Audi, Ford, they will have to get license from Tesla to use their software for autonomous driving. But yeah, that are just predictions. So if you believe Tesla will be the king in 10 years and we will ride on their software, yes, this price can even go up even more. But if you think other companies can catch up, then I think it's overpriced.
Yeah, and that was pretty much my follow-up, because again, like a lot of people perceive Tesla as simply electric car company, but you also saw they introduced the robot prototype last year and the actual robot this year, and they plan to make it available, for the retail customers. Again, when Tesla plans something, that doesn't necessarily mean it's going to happen in the time frame that they are promising. And this has been always so historically. Always there hasn't been any single model announcement or delivery schedule that they've met. So whatever they say, don't necessarily trust that. But I think robotics is one of the key things that drives Tesla's value in this context. By robotics, again, I mean the computer vision, I mean the autonomous robots, and all of those things. Okay, thank you. I think it's time to open the floor for the questions. Let's see if our audience has. I already see a hand. Can we just give them a microphone so that everyone can hear?
So I have one question. I know that we can make investment in many things, like new startups, on ourselves and stuff like that. So what will you say the people who's investing in casinos and next cryptos?
Yeah, you said invest in casinos?
Yeah, the people who's investing.
Who gamble, you mean?
Yeah, like.
I mean, I think a lot of people know math here very well and understand the probability and the rule of big numbers. So why would you play a game that you know you're on the losing side and the probability of you losing is higher than winning? On the other hand, if you're investing in stock market, there is a very good statistics about what's the probability of you losing. So let's take S&P 500. So the longer you hold the S&P 500, which is the simplest instrument that you can invest in, the chances of you losing money decrease significantly. So if you hold it only for 2-3 years, yes, there's about 30% that in 2-3 years, S&P 500 can be on the lower side than right now. But if you increase that to 5 years, it's only 20%. If you increase it to 10 years, it's only 1%. So longer you hold the investments in the stock market, the higher are the chances of you winning. On the other hand, the longer you gamble, the higher are the chances that you will lose. Now, crypto industry, you also mentioned crypto. I don't think investing in crypto, like every crypto is gambling. I think crypto has its place in the investment portfolio. But yeah, investing in just random coins, hoping they will 10x in 2 days, that's of course gambling. But if you're interested in this field, I think there is potential in major projects, even in Bitcoin, Ethereum. They should have place in your portfolio, but it should be, your portfolio should be diversified. So maybe 5-10% crypto, 5-10% real estate, bonds, stocks. So more you diversify, the less risk you take on yourself, and more you will just sleep better. Trust me.
Thank you.
Thank you for the question. I can just add that I'm personally very skeptical towards all things crypto, and that's just my subjective opinion. However, it can be not a bad idea to do a bit of crypto investing. And you know why? Just to train your patience. Because most of the people that I know around me for the past, 5-6 years, when, the stock was, when the crypto price was growing, and then the last couple of years, and it's starting being like super volatile, and I know we're going to hold it. We are not going to sell it. Ethereum is transitioning to the new this, and then this is happening that, and then they will stop mining Bitcoin in 2023 or whatever. So these people are waiting, and I admire, because I'm a very impatient person. I'm an extremely impatient person, but I'm not doing it to myself. So that's just my small piece of advice. Thanks for the question again.
Thank you.
Do we see? Yes, please. Let's bring a microphone here, please. Yeah.
Hi, can you hear?
Yes.
So I have one question. Do you know any platform like a brokerage account for Georgia citizens? I mean, because all of them are almost for US citizens or Canadian citizens and just like that.
Sure.
I know Bank of Georgia has platform, but it's not, how can I say, enough good to trade there.
Sure. So we actually, Galt Taggart, created that mobile bank application. So that's ours.
Which source?
Yes. So we are a daughter company of Bank of Georgia, and we created it with Bank of Georgia. Now, first of all, in Georgia, we have brokerage houses ourselves. So Galt Taggart is a brokerage house. We have different types of accounts. So mobile bank, it's for beginners who would like to start with $5, $10, even $20. Right now, we're lowering fees. So very soon, just buying transaction will be only 0.3%. Subscription will be only 50 cents per month, so it will be quite affordable. But yeah, it's simple investing up for who would like to start right now and invest a little bit. Now, if you're interested in more professional tool, we also have trader.g. You can go there. We also have a demo account that you can check. It's free to open, it just takes 2 minutes, and you will have virtual funds, $1 million. You can check it out. It's professional. We created it with Saxo Bank, which is one of the largest brokerages, and you can use that as well. We also have professional brokerage. So we have different types of accounts. So if you're interested, you can contact us. But if you're interested in international brokerages, yeah, you are correct. A lot of so I myself actually, besides Galt Taggart, I also had accounts in eToro, in TD Ameritrade, but unfortunately they blocked us Georgians. and not really sure why, to be honest with you. So I don't really know any other big brokerages, trustworthy brokerages that you can use from Georgia. There are a lot, but I'm not sure how regulated they are or how trustworthy they are, because trust here is very important. With us, for example, you know where the funds are, you know where to find us, and we actually, Mobile Bank has US insurance. So even if Bank of Georgia, God forbid, but even if the Bank of Georgia or us, we disappear one day, you are still insured by United States insurance company up to $500,000. So I would advise you to use a broker that you trust.
So do you recommend any offset
Um,
for stock trading maybe?
Not really, not really. So TD is very good, Robinhood is very good, eToro is very good. If you somehow manage to open accounts there, go ahead, but it's very hard for us Georgians. That's why we created Mobile Bank, and that's why we're working day and night to improve it, because there's just simply not enough access for us Georgians right now.
Okay, thank you. Thank you.
No
Thank you for the
problem.
question. Do we have more questions? Any
Here.
more hands? Yes, please.
Like you mentioned, GameStop stocks like when Redditors United and like bet against hedge funds, but like you said that how ordinary people can have more power in stock than like huge funds, but like didn't many retailers at the time they stopped selling GameStop stocks because like when it was growing in price, like they like stopped selling stocks because like to stop it's increasing in its price. Like
Yes, I understand. So you're correct. And yes, the investment industry and markets are still being developed. So when the GameStop saga happened, you're correct. Since the stock was rising very quickly, some of the hedge funds, some of the brokerage companies stopped selling it, which is, I agree with you, not a good decision, and it creates distrust of these companies. But there are different companies, though. Not all of the brokerage companies stopped selling GameStop shares. It was just few of them. Actually, most of the brokerage companies allowed their investors to go ahead. It was one of the few brokerage houses that were connected to the hedge funds. There's still, of course, these kind of things happening on the financial markets as well. But after that happened, there have been many different regulations created just to stop brokerage houses from doing that again. So it's being developed and it's being made better every day.
like as far as I am aware, like one such company, Robinhood, like didn't face any retaliations for like when they stopped selling GameStop.
To be honest with you, I'm not really sure what happened and what decisions were made. I didn't follow that specific case as well, but I know it's still being investigated. Maybe I'm mistaken, but they have been criticized a lot, and they lost a lot of customers because of that. And people actually went to brokerage houses that didn't do that. So once again, that's why it's important to choose a broker that you trust when you start investing.
Thank you.
Thank
Do we have more questions? I don't see any. Oh, yeah, I see a hand, please, here in the center.
You hear me?
Mm-hmm.
How do you think how big the market could be for robo-advisors, for example, in the Georgian context, if you take, for example, horizon of next 5 years? So is there any opportunity to be captured on the Georgian market for a Georgian startup company building a robo-advisor? This is the question.
So you mean Georgian stock market and capital markets?
Or a Georgian startup?
I mean a startup building a robo-advisor platform for the Georgian citizens. I mean, do you think there is an opportunity to be captured, and how big is the opportunity? I mean, could it be, I don't know, $100 million? Can you imagine Georgian citizens for the next 5 years investing?
I
don't know.
see, I see. All right, I understand you. I can share with you a very good statistic about the Georgian market. So, as I showed in the presentation, in US, about 54% of people are invested in the stock and capital markets. In Russia, it was about 10% before the war started. In Georgia, I think only 0.1, 0.2% of people are investing in the stock market. So of course, there is huge potential in this industry in Georgia. Even if we reach 1, 2, 5% of the population starting investing, this will be thousands and hundreds of thousands of new people investing in the industry, and all of these people will be beginners. They will need help, they will need assistance, they will need new tools, and this industry right now is just beginning. And there are, in Georgia, just to give you example, there are only 2 brokerage houses. It's us, Galt Taggart, and Tbilisi Capital, and we're still growing ourselves as well. But I think there is huge potential in this industry, not only in stock market investing. There are different types of investments that people can make, and there are different types of instruments in Georgia that can be created. In Georgia, right now, Georgian companies locally here have only bonds. So I think there's potential for companies to issue stocks, maybe real estate funds, startups. There can be funds on US stock exchanges. You have funds that are traded like shares, who invest in startup companies, in growing companies, even at the seed stage. So why not create something like that in Georgia? I think it will be interesting. I think it will open doors for foreign investors as well. We could interest a lot of foreign investors with that, and we could grow the economy. I think without capital markets, country cannot grow. And I think it's inevitable that this industry will grow, and it will grow very fast, trust me.
Thanks, Nika. Just 2 comments. As Nika showed, we have a lot of money actually on deposits in Georgia. And then you can imagine a lot of traditional families and individuals who still keep cash, under the mattress. And then you can imagine how this is only part of a diversified portfolio, how other people are actually investing this money, in real estate, in stocks and stuff like that. So there's a lot of money in Georgia. And I think, yes, you should try doing that, building a robo-advisor. However, now I'm putting, my angel investor hat on. Why would you only target such a relatively small market? You should totally think about going global. You should totally think about maybe, and I don't mean global like any country on earth, but like try targeting emerging markets, try marketing Asian emerging countries like
region. I mean, you can target the region because in our region, it's similar situation in Armenia, in Azerbaijan, even in Uzbekistan. I mean, this is a huge market. As I showed on deposits, we have, by the August statistic, Georgians have 22 billion laris equivalent on deposits, which is around, I think, 7 billion USD, right? So it's a huge market. This is invested in very simple instruments, and there are better alternatives. So yeah, I think it's a huge market, even if Georgia. But if you go regionally, Armenia, Azerbaijan, and other countries, it's huge.
Because there's also a very important global trend, and this is not only because of India or China, but like you take pretty much any other country which is not Venezuela, or which is not in a terrible economic situation. On average, the middle class is growing. People are climbing from the working class to middle class, from middle class to upper middle class. The number of millionaires is growing, the number of billionaires is growing. In other words, like the global economy is growing despite of the energy crisis and things like that, right? More people are buying air conditioners, more people are having access to toilet and clean water. And accordingly, the other people who have already done that several years ago now have bigger disposable income, which they might want to invest. So in Georgia and in other emerging markets, I think the trend is there. But then the question is how you're going to compete with other robo-advisors. So maybe targeting emerging markets is not a bad idea. Good luck. All right. Do we have more questions? I see no hands. Well, in this case, I want to wrap up with a very philosophical question for you, Nika. When I was a teenager, I remember this question was always on the agenda. Who is smarter, a human or a computer? And especially if you are following chess or if you're a chess player, this debate has always been there too, right? I mean, can the human beat the computer? And there have been cases like that. My response as a teenager was, well, of course, human is smarter because human is the one who built the computer. And it kind of made sense. Of course, now that question is not that simple and is more complex. However, when it comes to stock trading, when it comes to robo-advisors, when it comes to predictive analytics, when it comes to insider trading and humans having, I'm not talking about the hunch or instincts, but I'm talking about the butterfly effect, right? When you realize that, you know, the oil will eventually, we will no longer have oil. In long term, the stock of the oil companies might probably go down if they don't diversify, and the stock of green energy companies will probably go up, right? Question: can humans beat the algorithms which are trying to do predictive analytics based on all the possible data that they have?
I think that question, I would answer that question by yes and no. Short term, definitely, because short term, we humans are emotional beings. We tend to panic really quickly. We tend to be emotional, and that's the biggest flaw in investing. That's the biggest disadvantage. Algorithms don't have emotions, though, so they do their job really good short term. So there are algorithms which are trading hundreds and thousands of times a day. So in short-term trading, definitely algorithms are much better than us. But longer-term investing, I think humans are still doing it much better. Take Warren Buffett, take legendary investors such as Peter Lynch. They can think 5-10 years ahead. That's actually what the stock market is all about, just to imagine what will happen in 5, 10, 15 years. How will the future be? And just invest in that future. But machine learning and algorithms are becoming smarter. So maybe soon enough, they will be smarter in that sense as well.
Thank you so much. I think we can wrap up by saying that it will always be a combination of humans and algorithms.
Yeah, of course.
Make best possible decisions for the long-term investing. So again, once again, we encourage you to build better tools, better software, better algorithms to help humans do that. And of course, we're still going to follow our vision and hunch, because again, at this stage, with all of the sentiment analysis, with all the social listening, I don't think the AI is that advanced to have a proper reaction to tweets or transcription of an interview that someone is giving. Thank you so much, Nika, for doing this.
Thank you, everyone.
So much.